Quick bit of housekeeping before we start. Tonight at 7:45, I am going to answer your questions. So throw them up there, put them on X, put them on here, wherever you want to put them. You can ask me anything. You can ask personal questions. You can ask business questions. You can ask, questions about Tesla. That would be the best. But that's what we're going to do at 7:45. So hopefully they'll get some useful ones, things that will cause other people to be able to learn something or gather something or anyway, you know what to do. So we have had an election. Did you know that we had an election 7 weeks ago tomorrow? I think, no, I'm sorry. Is that right? 7 weeks ago, Tuesday. Yeah, I think it was Monday. It was a Monday. We had Mr. Trump take over, President Trump take over the White House. But the folks who say they are really worried about undemocratic principles coming from the MAGA White House, they aren't acting very democratic. They're encouraging people to go to the streets. They're burning and destroying property. They're interfering in commerce. I don't think these are actually democratic principles. And it's possible that I missed something in my civics class about this being the right way to, run a democracy. It seems like maybe after there's an election, you should allow the folks that won to go ahead and do their business and see if it works out well. Of course, I think right now there's a lot of Democrats rooting against the current administration, rooting against Elon Musk, rooting against Doge. They're rooting against America, is what it really boils down to. If they're rooting against cutting federal government spending, even if they're rooting against the way that it's being done, they're really voting against America. Anyway, that's just my opinion. That might be something you want to, bring up in the questions that I'll be answering later on tonight. Anyway, I'm kind of nervous. Well, not nervous. Actually, I'll be glad. I think we're going to see more and more police action with regard to these criminal behaviors that are taking place on our streets right now. Maybe there'll have to be some police action with regard to some of the members of Congress and the Senate who are actually encouraging and inciting this behavior. Fortune magazine says this. It says, use that template. They created a template. They said that Tesla posted fundamental earnings of 4.2 billion in 2024. Okay. And probably up in 2025, but let's just call that 4.2 billion. To establish a reasonable market cap, we need to decide what the PE is going to be. For the 10 largest automakers outside of China, a group that encompasses Ford and GM, et cetera. The average is 6.9 PE. Only Nissan breaks double digits at 15.1. Still, a huge share of Tesla sales flow is from China, and the Chinese players sport higher multiples than anywhere else, often 20 or above. So we'll give Tesla a PE of 20, which is still 3 times the norm for car makers outside the world's second biggest economy. Okay, now you multiply that 4.2 billion by 20 and you get a market cap of $84 billion. But Tesla's valuation as of mid-afternoon on Monday, March 3rd, stood at 955 billion. And I think it came down from there. Hence, it's selling at 227 times its 2024 underlying profits with a cap of 955 billion divided by the profits of 4.2 billion. And that's after an historic sell-off. These adjusted earnings, by the way, are less than half the 11 billion that were kind of expected by now. So what are you going to do about that? Well, what you're going to do about that is you're going to say, okay, so how much? I think that valuation is wrong. I think you have to take into consideration forward earnings instead of current or even last year's earnings. Then you also have to take into consideration looking out many years in the future and give some kind of an indication of what the growth is. And it's not all about cars; it's about energy and other things as well. But what they were trying to do was say, what is Elon Musk worth? What is he really worth? Could you just have Elon Musk quit tomorrow because he's damaging the brand? And would Tesla stock go up as a result, or would it go down as a result? Well, let's say that he's wrong by half. Let's double it. Let's say it's 170 something billion is the actual market. Well, okay, that still wouldn't be enough. What if we 4 timed what he said? You still wouldn't be getting there. So. Yeah, the truth is that as I've talked about a couple of times last week, A huge percentage of the value of Tesla is Elon Musk. It's Elon Musk is what has made the company. It's 100 PE. Best case, it's 100 PE. If you take into consideration what we think Optimus is going to do and what we think that Robotaxi is going to do, et cetera, then, the PE would come down a lot over the next year or so. But the stock will go up too, so maybe it won't come down that much. But it's all about Elon. And if you took Elon out of the equation, no, the stock would be worth maybe, well, considering how far along we are on Robotaxi and how far along we are on Optimus, maybe I could potentially see a valuation of maybe 500 billion, but not a trillion. And the 2 trillion and 3 trillion in the future, not sure that I could justify it. Maybe, but I think the stock would drop a ton if Elon Musk went back to his home planet. Anyway, this is from the street. While Tesla's stock price may continue sliding, and it might, some signs are starting to suggest that the selling may be getting overdone. If so, Tesla's stock could soon experience a relief rally. One of the signals that may be flashing a buy sign is the relative strength index, or RSI. There's an RSI 14 that measures price action over the preceding 14 trading periods and can signal when stocks become overbought and oversold. When the RSI is above 80, it signals buyer beware. However, when it dips below 30, it can suggest that the shares are about to move higher. Tesla's RSI eclipsed 80 in mid-December when shares were near 480. On March 7, when the price was about 263, it was 27, a third consecutive day below 30. The RSI is oversold for the first time in almost a year, wrote longtime technical analyst Jason Meshnick in a post on the Street Pro. There's support here from both the uptrend line and from the peaks from last July, September, and October. If Tesla shares find their footing, how high could they go? Trend and momentum support a bounce, said Meshnick. Okay, and this is Randy Kirk, by the way. You probably knew that. You can hit the like and yeah, all that stuff. Yeah, subscribe. You can subscribe, get notified, because what's going to happen later tonight? Yeah, you're going to have those questions. I'm going to answer your questions later tonight. Don't forget to put your questions. You can even stop the video right now and put down questions if you want, or wait till the end. I don't care. But put some questions down. Give me some meat. Give me something to dig into. All right. And then thank you for joining Patreon. That would be fantastic. Pre-markets are off. The pre-markets are definitely off. As Trump agrees, there could be this morning he was being interviewed. It might have been yesterday afternoon. Anyway, he was being interviewed by Maria Bartiromo. And she asked him, she says, well, Elon has said, other people have said, the Treasury Secretary has said, we could be in for some rough days ahead. And he says, yeah. I'm not quoting him directly, but basically he said, yeah, it could happen. Yeah, it could happen. We could be having some rough sledding ahead. The Atlanta Fed says we're going to have some rough sledding. I believe we're going to have some rough sledding. If you didn't see Larry and I talking about this on Saturday evening, last evening, 7:45. You can go back and look at that video. Yeah, it's very likely. It could be a few weeks. It could be a quarter. It could be 2 quarters. But I think that we will go into the red in terms of GDP for a period. And the CPI is going to also come out. So we got Trump and the Secretary of the Treasury talking about, and the Atlanta Fed all saying we might have some rough sledding ahead. Then we got CPI coming out this week. We got the continued uncertainty over tariffs and DOGE. Markets aren't happy. And a full S&P correction would not shock me, as those of you who have been watching this channel are well aware. In fact, I wouldn't be shocked if the S&P goes to full bear, which would be 20% down from its all-time high. After 2 years in a row of going well over 20%, it would not surprise me if we did 20% correction, and then we'd be off to the races. If we have a 20% correction in S&P, that's usually going to mean a 30% correction in the NASDAQ, and it's probably going to mean a total of another at least 10% for Tesla. Tesla, having already been beaten down, may not go down quite as much. I've said it before, I'll say it again. If we do continue to see negative sentiment in the markets, and if the negativity continues to hang around Tesla, we could be looking at a 185, and that 185 would be just like your 101 was, what was that, a couple of years ago. What a great buying opportunity that'll be. But I'm not convinced that we're going to go that low. We could do a 220, or we could be really bottoming out at around this level down. All right, so borrowing has dropped. What's this? I'm sorry. Borrowing drops. Oh, okay. I'm sorry. This is a different story. Borrowing by consumers has dropped to a 4.4 annual growth rate, about half the strong December gain. The numbers here were that total consumer credit rose 18.1 billion in January, down from 37.1 billion in the prior month. So that's all good news. Revolving credit, like credit cards, rose at an 8.2 annual rate in January after an 18.5 gain the prior month. The Fed's data does not include mortgage loans, which are the largest category of household debt. Households are less insulated from economic shocks, and they're just not borrowing as much. The economy, it says, is K-shaped, but not particularly fragile. To put it simply, current economic conditions are significantly more favorable for the top 50% of the income distribution than they are for the bottom 50. So you know that Larry and I have been talking about that for, I don't know, 18 months now, talking about the two parts of the economy are completely separated right now, but the folks are going to come back. The folks that make under $100,000 a year, they're going to have a very good year this year. The folks that make over $100,000 a year might actually see some of their assets trimmed a bit this year, although I don't know. I can't see housing coming down yet. Fox Business says this: Freddie Mac's latest primary mortgage market survey released Thursday showed that the average rate on the benchmark 30-year fixed mortgage decreased to 6.63 from last week's reading of 6.76. The average rate of the 30-year loan was over 7% when Trump took office. I actually added that. They didn't talk about, I went and looked that up, and it's down from over 7%. The 30-year loan saw the largest weekly decline since mid-September, according to Sam Cater. The decline in rates increases prospective home buyers' purchasing power and should provide a strong incentive to make a move. Additionally, this decline in rates is already providing some existing homeowners the opportunity to refinance. And in fact, the refinance share of market mortgage applications released this week reached nearly 44%, the highest since mid-December, and it will get higher and higher. Remember, a lot of people went ahead and bought a home at over 8% mortgage rates. So when we're talking about getting down to the 6.5%, that's a good time to go refinance. Unless you don't want to refinance. You might figure you want to wait till it gets down into the 5s. And there's every reason to believe that we will be in the 5s. I would say by June or July. All right, so we got a bunch of, this is going to be a bunch of stuff coming this week. So my favorite, it's at the top of my list because I'm a small business guy. Many of you probably are too. The NFIB, National Federation of Independent Business People's Optimism Index, comes out on Tuesday. It was 102.8, still slightly optimistic last month. They are not giving us their estimate, no estimate for this month. I'm going to say that they're still probably slightly optimistic, but maybe not. They might have fallen into pessimism over all the headlines and over the reality. I mean, listen, again, reality. Folks are slowing down their purchases, trying to make sure that they understand what their future is. When things are looking a little bleak out there, people put their hands in their pockets. All right. Then the job openings, the JOLT is also out on Tuesday. So those will be super interesting. The JOLT will be more likely to impact the markets than the NFIB does. The NFIB, for some reason, the markets don't seem to be terribly affected by that, and they should. It is 60% of the economy. On Wednesday, we have the Consumer Price Index. Last month, it was up 0.5%. That was the headline number. They're thinking it would be back to something more closer to normal, 0.3%. They're thinking the year over year, which was 3.0 last month, will be 2.9%. The core CPI was up 0.4. 0.4 last month. And that one, they're thinking will also drop to 0.3. I'm going to think that the consumer price index, the headline number, could drop that much because oil, gas, everything's down on the commodities level. Most of the commodities are down. I'm sorry. All right. And then core CPI year over year was also looking at 3%. That's what they think it's going to be. Same as last month. And then the federal budget comes out, and last month it was negative 296. And they're thinking it will be negative 275 because hopefully Doge is starting to have an impact. All right, then we've got initial jobless claims on Thursday. As always, they're thinking it's going to be around the same as last week at 220. I think that might bump up a bit. We'll see. I would be more inclined to think it's going to bump up. We get the producer price index, so the PPI coming out the next day. Last month up 0.4%. Again, another scary number. They're thinking it will only be up 0.3, back to something closer to the Fed's numbers. And then the core PPI last month was up 0.3. That's too high. They're not giving us a number, not giving us an estimate on that, or on the year-over-year numbers, no estimates as well. Last month at 3.5 and 3.4 for the core. Friday, the consumer sentiment index comes out. That it will be the preliminary, so the first one of the new set of numbers that come out. And last month it was at 65.7. Last quarter, 65.7, and they're thinking it'll be down to 64. That consumer sentiment is dropping. We saw that in the consumer confidence numbers that came out last week. All right, we got three companies, major companies, coming out with their earnings this week. First, we got Target Corporation, obviously a major retailer. Their earnings are highly anticipated because of its exposure to consumer spending. And the information that they'll give us with regard to inflation. Maybe they'll give us some thoughts with regard to how they're playing the tariff business. Analysts expect the growth to be 2 to 3% year over year, and earnings per share around $2 to $2.20. And that is what they're shooting for. Costco, also consumer sentiment. We'll be seeing something on, which is really a different customer than Target. They also, membership growth is important there because that $100 or so a year they take from us is where they make all their money. So analysts are expecting a good EPS. Now, remember, the important thing on these is always to look at what they are saying in terms of their guidance. What are they showing for the rest of the year? And revenue growth, they're saying, will be up 5 to 6%. Then you got Broadcom, which is a semiconductor giant. You're well aware of them. They're pivotal for the AI and data center business. And of course, Trump is pushing on that end of the business, trying to get it to build in the United States. And analysts are expecting that to be showing a revenue growth of 10 to 12%. So having said all that, where are the markets now? Let's go ahead and take a look. And let's start with those bonds. And the 10-year is down 5.5 basis points to 2.59. Actually, 5 point, that's what I said, 5.9 to 2.59. I must have missed something. I guess, yeah, that's right. It went up on Friday. So we're now reversing what happened on Friday, but we're still above this 4.25 level, which is kind of my, I want to see that breakdown below 4.25 and head towards 4, actually towards the 3s. Then we've got the 2-year is down 4.4 basis points. And the 2-month is unchanged so far in the pre-market. From there, we go to oil, which is down another 38 cents, down to $66.66. Lots of sixes there. Brent is almost getting below 70 again, sitting just above now at $70.02. Natural gas up 5.86%. Natural gas is, maybe it's always volatile like this. I don't know. I mean, it has been the whole time I've been watching it for the last, year, 2 years. Natural gas is now at $4.66. Okay, and so what have I heard about the oil recently? There's all kinds of conversations about whether OPEC is or isn't going to increase the amount that they're going to be producing starting after in the month of April. That is a big putting pressure on oil prices. We've got, of course, Trump saying drill, baby, drill. And of course, if the United States actually adds 3 million barrels a day to the production in the United States, that would have a big impact on oil. As we've mentioned many times before, getting it down to around 60 is kind of the sweet spot. I think that's where Trump would like it. I think that's where the oil industry would be okay with it. And so that's, we'll see if we get there. We have got gold having a weekly gain right now. It is up right now $10 in the pre-market at 2,924, up 0.36%. Silver has been vacillating right around $33. It continues to do that. Is at $33.03, and it is up 0.7% in the pre-market. Copper is sitting at $4.70. That is down a little bit, down 0.2%. Okay, the dollar, of course, has been a little bit under pressure because of interest rates going down, because of the concerns about how tariffs are going to play out. And right now it is mixed for this evening. Okay, Bitcoin is not mixed. Bitcoin is down 5,646, sitting at 80,615. So, pretty much on the precipice of dropping back into the 70s. I think the folks in the crypto space very disappointed that the United States government is not currently buying a bunch of different coins to put into the reserve, rather just not selling any. So that has hurt the immediate prospects, and so we're sitting here around that number. Okay, then what about the equities? Well, we've got the Dow. All of them are down. And that would be a continuation of what was happening on Friday. So we got the Dow down 0.58%, sitting at 42,589. We got the S&P down 0.75%, so down to 5,732. And the NASDAQ down 1% at 20,000, almost even. That's down 204 for the NASDAQ. So, yeah, we're going into next week with some hesitation in terms of the equity markets. All right. And then finally, I am going to take a look here at Tesla. And Robinhood is just opened, and we are seeing that Tesla is following the rest of the NASDAQ. It is right now at 257.50. Closed on Friday around 262. So that's where Tesla is right now. All right, last chance. As a reminder, anyway, go ahead and take your best shot at sending those questions that I will answer later tonight at 7:45. And then this morning, Phil Beisel and I thought it was a really good show. Maybe it wasn't interesting to you, it was interesting to me. And he was talking about the various ways that Tesla and SpaceX are integrating. Okay. That's the Starlink and the Grok, XAI, X and XAI2, all three are integrating, all depending on one another for various different things that they do in order to get to the final result, including even the Mars thing. And Mars is going to be, all of the things that are happening right now. Those four companies, if you will, are contributing to one another, and Phil really filled in some blanks and made some interesting observations in that regard. So if you didn't see that video and you don't have something planned immediately, right there, you can go check it out and see what Phil had to say. All right, that's all I got for you right now. And let me just, I'll look one more time just for fun. Hey, it's 258, so we're climbing. Yep, 258. All right, so that's all I got for you right now. It has been great talking to you.